everybody. Thanks for joining us. Phil, I want to start with you. I don't mean to be a Debbie Downer, but I can't find any bright spots. Oil, right? Oil hit 84.
No, you
but
can't.
That's not really a bright spot because that means gas is more money.
You're absolutely right. Back in the old days, you're right, Lauren, we used to think, hey, oil prices are going up, the economy's good, and that's a great thing, right? But not so much lately. You're absolutely right, because if you look at what's going on with oil, it's really a bunch of mistakes that have led us to this point. The U.S. is underinvested in energy. The world is underinvested in energy. And not only does that impact prices, it impacts geopolitics. I think what you're seeing right now in this late surge in the day of oil touching $84 a barrel for a short period of time is concerns about what's going on between Russia and the Ukraine. Oil prices really soared when there was a report that the Biden administration is warning that Russia could issue a false flag situation as a pretext of starting a war in the Ukraine. And that's got oil traders. Russia is a major producer, over 11 million barrels of oil and products a day, natural gas. And the sad part about this is that Europe is really dependent on Russia for their fuel, whether it be natural gas or oil. And if there's some type of a war or some type of a situation, Europe is going to be hard pressed to react because Russia, if they don't like what they do, could cut off their supply. So it's a really dangerous situation, and traders are going to be nervous.
Well, you managed to do it, Phil. You managed to find another negative spot for the market, and that's geopolitics. And I'll add the Libya situation to the oil story as well. All right, Tom, come in here. We always talk about this rotation in the market, but today you have growth and value both down and underperforming. What do you make of that?
Yeah, well, you're seeing a bifurcation in the market. Certainly the oil stocks are up today, and it is a stock picker's market because you look at Wells Fargo, the increasing loan demand, that's what people want to see, and Wells Fargo is green despite all the other financials being red. So I think this negative number on retail sales is temporary. There were three factors. First off was Omicron in December. Second off were the inflation numbers. Demand went to goods versus services during the pandemic. As Omicron dies down, money's going to go back to services, in particular travel and leisure is a group that we like, and that's what we've been focused on. And one of the groups that we really focused on, Las Vegas Sands, Wynn Resorts, and Melco Crown. These are casinos that we've been building a position for the last couple of months. Today, they got the licensing approval done in Macau. That looks like it's going to go for 10 years, the licensing. They're up 10%, they're up double digits, but we think those have a long way to run. They're still down 37% from their 52-week highs. So we see an opportunity there, and we think this short-term retail sales decline is temporary. The consumer is in very good shape, strong balance sheet, low debt servicing ratios, and jobs are abundant here moving forward.
I want to challenge that point, and I'm going to give this one to you, Phil. You look at Sherwin-Williams. They lower their guidance because they're looking at the supply chain. They're selling paint that costs $125 a gallon. $125 a gallon for premium paint. Are you kidding me? Is that just a price that consumers are just going to balk out and say enough is enough, and that we kind of hit our pain threshold, if you will, when it comes to this inflationary environment and the high price of products, even though we have strong consumer balance sheets?
Yeah, I mean, when you talk about paint, you're absolutely right. I mean, I think they're going to leave their walls blank. But, it's weird because you have this building boom that's been going on, right? And they've been building stuff up like crazy. So, listen, the inflation, there's no doubt about it. Listen, I think Tom's exactly right. Vegas, I agree. I think we should go to Macau together just to test that out to make sure if it works. But at the end of the day, I think at the end of the day, listen, inflation's going to play a big part in these retail stocks. And yes, the consumers' balance sheets are as strong as they've been, but that can change. When you start paying, as much money for a gallon of paint as you do for, a gallon of wine, that's about the same price. It's going to start cutting in. Gasoline, I mean, you're kidding. It's up 50% from a year ago. And the sad part is we don't see that slowing down. So inflation is still a big time problem. And that's going to cut into those consumers at some point.
Yeah, and Tom, we're seeing these huge intraday moves day after day. I know the year is still young, but The volatility is certainly there. Maybe investors are just trying to figure it out. I guess the bottom line is they typically buy the dip, but we're not seeing the fear gauge really spike. Can you kind of explain that? Are we just trying to find our footing? What's going on?
I think that's exactly it. I think, Lauren, every day you're seeing a new Fed speaker come out and give conflicting messages, and the market really doesn't know what to do. You had yesterday a Fed speaker come out and say 3 rate hikes, and no, we have to wait for the Fed funds rate to hit 1% before we start quantitative tightening. That is completely different from what we saw in the Fed minutes when everyone got nervous last week that they would start quantitative tightening in line with raising rates potentially as early as March. So basically, we're just getting too many mixed messages, and that's why you're seeing this move to growth, move to tech, move to value, and it's back and forth every day. But the key thing is, if you focus on good quality companies that have earnings growth, that have consistency, that's where you're going to move ahead. And you want to look at some of the groups that have been a little bit out of favor. That's why we do like travel and leisure. That's why we do like casinos. We see the Omicron cases rolled over in South Africa, now in the UK. People are going to want to get out and about. That's going to alleviate some of the pressures on the supply chain and for goods, and I think it's very constructive moving forward. The Fed just needs to get clear on its message so the market can take off.
I can't seem to feel like a Vegas trip in your future for some reason, Tom. Tom Hayes, Bill Flynn, happy weekend. Thanks for the time, gentlemen.
Thanks, Lauren.
And breaking news right now.